In this lesson, first I'm going to teach how to identify a gap and then how to use them in order to structure your market. In the last lesson, in the last post on Map Any Market in Any Time Frame, we use swings. And so there are various ways to map and structure a market. A gap is another way. When I say structure a market, I mean take all of the gobbledygook and the noise and eliminate it and just look for what's significant. A swing, a gap. You can come to this chart and you can see right away what's significant on this chart and not be glued to every single tick or sitting there lost and confused. So gaps are a good way to view and experience markets. Once you learn how to identify them, you can do a whole lot of your own research. I'm not using them as a setup here. I'm not saying they have to do this or they have to do that. We start out with first mapping the market. What it is, it's a supply-demand imbalance. So it's a very good marker. It shows you where they threw them off the cliff. You can come over here, see they threw them off the cliff right here. It's a very good marker for you to start with and orient yourself to any chart. And later on we can even combine them with swings. We can use them for confirmation entries, so on and so forth. But this is going to be a basic lesson. So first, to identify them, a wide range bar bigger than the last three bars. So there's going to be a wide range bar and it's going to be bigger than the last three bars. And there's going to be a space between the previous bar and the subsequent bar, leaving a gap. See, in the old days, when there weren't 24-hour markets, some news would happen overnight and price would get priced in. But now we have 24-hour markets. So this is empirically the same thing as a gap, but it's a way to identify it via the language of price. How to mark them out is simple. If it's an up gap, like this, you mark out the bottom third of the wide range bar. If it's a down gap like this, you mark out the upper third of the wide range bar. And this is basically how the market moves in some way or another. Contraction, expansion, reverse or continue. Now in essence what this thing is doing, it's projecting, right? It's projecting a possible mountain or valley. So a valley structure will look something like this. It looks like a valley. You know, a mountain structure will look something like this. It looks like a mountain. So after price gaps, it is projecting a possible mountain or valley. Doesn't mean it has to happen. And again, I'm not doing a setup here. First, we learn how to view our markets. So for instance, if we come over here, we can identify this is a wide range bar. It's bigger than the last three bars. And so what you're going to do is mark it out like so and make observations. Now along here, price has its options. If you've seen my previous post, it can be a push trade, number one. It can push straight down. It can expand, watch the gap, and then continue, or it can expand reverse. First you got to identify it. It can do any of those things. So that's how to identify it. Now tune your eye. There's a down gap. Along the way, you should be able to see an up gap that meets this definition. You just follow price along. You look. There's this bar. Is it bigger than the last three bars? Yes. And so you mark it this way. So this would be a down gap, and this would be an up gap. So it's showing you what's going on in price. It's showing you something got zoomed one way or the other. It's showing you, okay, we got excited, imbalanced when we're running into this one. And so that's how to identify them. Okay, that's how to identify them and mark. And then you can make your own observations. There are lots of possible trade opportunities when you understand what's going on with these things. And so here we can see who won. And so let me just add something in here about it being a projected mountain or valley structure. Let me just add a little piece to this. So at this point of the gap, it is literally projecting. It doesn't have to, but it's projecting a mountain or valley in the same way a median line projects to complete the swing cycle. So for instance, if you have A, B, C, and price is swinging rather than gapping, a median line is projecting to here. That's its median line's job. You get here, it's projecting that the swing cycle completes itself. A gap is doing the same thing. So when you gap down, there's a projection from here, from the black circles to here in the same way. It's a projection. Price does not have to make it, but it's a projection, okay? Price can actually just keep going. But this is what a median line does, and this is what a gap does. A gap is projecting a valley structure. And from that, we can begin to think about ways to use it and not let it use us. We can also combine it with swings. So this is last week's market. This is the work we did in our live sessions. So in last week's market, we identified major swing and minor swing. And you can go back to swing lessons for that. And if you want, you can see another gap here. And so you can map a market via swings, or you can map a market via gaps. So in this way, I'm following a market through its gaps. Not worried about much else. And it's a great way to orient yourself to the chart. You follow the market with the gaps. When the gaps quit going down and turn up, then you follow the gaps upward. It's that simple. All right. Now I also, I mentioned any market, any time frame. And so let's go take a look. But before that, I do want you to get what I'm looking at here. I'm looking at gap, how I'm experiencing this market when I'm using this as a way to structure. So I'm looking at gap, simple gaps. And that's what I'm seeing. Okay? That's what I'm seeing. I'm not worried about the news. I'm not worried about the secret numbers. I'm not worried about the setups. And I can make decisions from here. So let's go take another look at something. Let's come to the pound. And by the way, you should be able to, this is the weekend, this is the pound. This is the recent pound. You should be able to quickly identify in all this gobbledygook a gap. Wide range bar, bigger than the last three bars. Do you see how this just sticks out? It just sticks out. Okay, so this becomes a marker for your chart regardless of the lines you're using. So now you know where they threw them off the cliff, and then you'll know what happens afterwards. Do they make a new low or do they beat the gap? And you can follow a market in that way. And if you've been following my lessons on swings, you'll see that they often coincide with these balanced reaction legs. So let's look at a weekly chart of this pound. Now here's a gap that we marked out live during our live sessions. We've been doing these live sessions for a while. Way back here in 2016. This is the Brexit. Everybody's hopping, jumping around all over Brexit. News this, news that. World's coming to an end. Blah, blah, blah. We did one simple thing here in 2016. And so this is my point about any market, any time frame. This is a projected mountain. No matter what the news or circumstances or anything else is. And from here we did follow it up. And you'll notice that in some of these guys, whether you're on a tick chart or a weekly chart or an ES chart or a NASDAQ chart or a bean chart, you'll notice certain tendencies of these guys. And you can read the market through the gaps. And you'll see things like grinding right back up into the gap. So you get the idea. So that's how to identify gaps in a market. It's a basic lesson on that. So when you get a big gap, what it's doing is projecting a valley. This is what a valley structure looks like. And we'll come back to the 20-minute. And you can use this one to follow the market in this next coming week. As long as it's making this big down gap, it's going down, right? If it goes through it, hey, then we have some new information. All right, so this was a basic lesson on gaps. There's a lot more to do and understand with these in order to read the market, but look for the biggest, ugliest, nastiest thing on the chart, and then don't worry about wasting all of your energy on all the rest of the nonsense. Just follow price, and price will teach you.